Okay, for those of you that are just joining us, welcome. Thank you again for being here today to learn and discuss the basics of down payment assistance programs. We're going to be talking about what they have in common, how they're different, and what you all need to know to start conversations about DPAs without necessarily being a program expert. My name is Will Medina, part of our DPR team. I will be your DPA tour guide, as they say today. We also have with us in the background Keith Futrell, our DPA program specialist, Tracy McIntosh, our customer success manager, and Lori Johnson, our customer success specialist. All in all, an A team of individuals who are here to help us today run this very awesome webinar. They will be answering questions in the background, so we ask that you feel free to engage with them using the Zoom Q&A feature as we go, but we will also be monitoring the chat. And just as a quick note, the recordings will be sent to everyone today. So we always like to start off with a little bio. Down Payment Resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find, let alone track, homebuyer programs. So DPR stepped in and developed an easier way to connect eligible borrowers with hard-to-find resources like DPAs, grants, mortgage credit certificates, and other assistance. DPR also provides tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help everyone find and understand the down payment solutions out there for your buyers. And just as a fun fact, we are happy to be celebrating 16 years this year. We are extremely thankful for all of the support, and we're looking forward to continuing our mission and our vision. Ultimately, as mentioned, we're here to help you connect home buyers to the down payment help that they need. So today, we're going to be discussing the following topics. We're going to be talking about the basics of loans, grants, tax credits, and other types of programs that can help eligible buyers achieve the down payment faster, help cover closing costs, and ultimately get them into a home sooner than they would have otherwise. Now, let's take a look at the current state of assistance programs. Of all the homebuyer programs out there, 73% are some sort of down payment or closing cost assistance. We like to say that that's really a catch-all category, and we will dig deeper in a few minutes, but it's important to know that not all DPAs are the same. It's important to note that not all DPAs are the same. 81%, for example, have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 54% are forgivable, either in part or in full, which means they essentially become a grant over a period of time. And 51% are both deferred and forgivable. And then there are still other down payment assistance programs that are considered true grants at closing or may be repayable monthly after closing. Now, we will break these down further, as well as the affordable first mortgages and tax credits or mortgage credit certificates, as they're also known, in a moment. So one thing we're always asked is, where are these programs located? And it's safe to say that these programs are everywhere. Now, some markets have more homebuyer programs than others, but there's a state housing finance agency in every state, and their programs are available statewide. So there's literally no county or market in the country where there isn't at least some kind of DPA or other form of homebuyer assistance. And one thing we always like to point to, which just came out in our recent Q3 homeownership program index report, is the infographic in front of you, just ranking at least 1 through 10, right? Top states with the amount of programs within those states. Another question we also get is who funds and administers these programs? So I just mentioned that every state has at least one housing finance agency. There are city and county governments, which often have community or economic development departments or housing authorities. There are a number of nonprofits, for example, NeighborWorks, Neighborhood Housing Services, and others which operate in markets across the country with varying programs. Another example are employers like municipal governments, hospitals, and universities that may also offer their employees some form of down payment assistance. There are also community action agencies, land trusts, and so many other organizations across the country that are all trying to open new doors to homeownership and promote housing growth and responsibility in their market, which is your market. And they've all got funded and available down payment assistance programs. So we also like to take stock of current DPA trends. That first bullet point is one of the most important ones. Demand remains through the roof. Providers are increasing assistance amounts, income limits, and purchase price limits to help buyers in today's market. We're still seeing new state and local programs continue to launch in markets across the country, and 81% of all down payment assistance programs are funded and available. There continues to be more and more attention on affordability and down payment assistance now than in many years. So it is safe to say that these programs are still available and not going away. In fact, our recent quarter 3 2024 homeownership program index report showed an 8% year-over-year increase in the available programs, raising the total number of programs offered to roughly over 2,400. More programs are coming to markets all over the country, which continue to offer you more opportunities to help new buyers. We also reported on growth in home buyer assistance programs that expanded inventory options for home buyers, which included support for manufactured housing and 2 to 4 unit properties, so long as one of those units is owner occupied. And just since the last quarter, I believe 2023, there's been a 15% increase in programs that allow for manufactured housing and a 15% increase in programs that allow for multifamily properties. We also reported on programs for first generation home buyers and first time home buyers. And specifically, when looking at programs for first gen home buyers, 22 programs currently target the first gen home buyer, which is a 5% increase from Q2 of the same year. Now, all of these programs share some basic universal requirements. For example, they are only for owner occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available to buyers of, say, 2 to 4 unit properties, as long as they will occupy one of those units. Now, these programs all still require some minimal investment from the buyer to help keep a little skin in the game, as they say. This investment can take the form of a monetary investment, which can range, as an example, from 500 to $1,000, or perhaps more. And let us not forget that the buyers are also investing time, for example, by completing their home buyer education requirement, which buyers typically complete a home buyer education course to qualify for a down payment assistance program. And of course, these are not cash buyers. We're talking about buyers financing their home with a mortgage, so they have to qualify for a mortgage as well. Now, with those universal requirements in mind, let's now take a look at the 3 most common types of homebuyer programs and what's unique about each of them. So the 3 most common types of homebuyer assistance programs are the down payment assistance program, the affordable first mortgage, and mortgage credit certificates. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. And please remember that as we go, no 2 programs are exactly the same. But as mentioned, we're going to learn the basics of each type so that you can understand at a glance what your options are. So let's begin by reviewing down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who offer down payment assistance. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to possibly tens of thousands of dollars to eligible buyers for down payment help. Now, I would like for us to look at the infographic off to the right, and let's start with grant programs. So grants are gifts that do not have to be repaid. Repayable seconds are funds provided at closing that may or may not accrue interest, and the loan could range from 5 to 30 years with varying repayment terms. We have deferred or silent seconds, where repayment of the original amount is postponed until one of several events occurs, commonly when the borrower sells, refinances, or if there's a change in occupancy. And lastly, forgivable seconds, where some or all of the original down payment assistance is forgiven. Often, a percentage of the loan is forgiven each year for, let's say, a predefined number of years. As an example, it's common for a forgivable DPA to be forgiven 20% per year over the course of 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses such as escrow, rehab or repairs, which can be particularly important to enhance the property or accommodate livability standards for disabled buyers, and even loan principal reductions. All of these uses help the buyer shed the costs of purchasing and financing a new home. And we're even seeing more programs allow their funds to be used for temporary or permanent interest rate buydowns. Now, one of the most common misconceptions about down payment assistance programs is that buyers must be first time buyers. In fact, there are over 2,400 programs across the country maintained in down payment resource, and 40% of them have no first time homebuyer requirement. You heard that right. Beyond that, most programs adhere to HUD's definition of a first-time homebuyer, which effectively states that you're a first-time homebuyer if you haven't owned a home in the last 3 years, with still more exceptions to that rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive the first-time homebuyer requirement in targeted areas, or make exceptions for veterans or certain professions, or that just don't have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash up front and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest free, payment free gifts to buyers who meet the eligibility requirements. Of course, others may bear interest, but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So, for example, many programs stipulate that the buyer occupy the property for a certain number of years. That may range from 3 to 10, as an example. And then the lien is forgiven, essentially becoming a grant. Now, for those programs that are not grants, many will take second or third lien position to allow for layering of additional assistance programs. So, what are the eligibility requirements? Well, what we found is that most have the following limits. Eligibility, of course, depends on the program and the funding sources. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, AMI, the average income of their market. But basically, they all have income limits ranging from 80% all the way up to 140% of AMI, and sometimes even higher, which has been shown to creep into six-figure incomes in many cities. Now, they typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. Also, the location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But it's important to remember that the programs from your state housing finance agency offer homebuyer assistance statewide, which means it covers your entire market. We even have some nationally available programs integrated into down payment resource. Also, some programs have more needs-based eligibility criteria, which will involve an evaluation of each buyer's scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements, as an example, requiring a FICO score of 620 or higher. Homeownership history makes a difference too. Many programs, as mentioned, are only for first-time home buyers, but there are many for repeat buyers or even current owners. And again, it's important to remember that a first-time home buyer is simply someone who hasn't owned in the last 3 years. I'll expand on eligibility as it pertains to military service and certain professions in a few moments. But it's important to note that both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying cost for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out-of-pocket expenses and retain, very important, retain their liquid savings. As an example, think about someone obtaining FHA financing. They're going to be putting 3.5% down. If a down payment assistance program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, regarding an FHA mortgage, it has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premium and lower monthly insurance premiums that can be canceled once the buyer reaches 80% loan to value. When you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like. And in some cases, because we know this is important, qualify for a little extra home to suit their family needs. Of course, reducing monthly payments also allows for a little extra cash every month to be put right back into savings, which we know has been shown to improve default rates. Now, many down payment assistance programs require the buyer complete a home buyer education course, which provides valuable information about the home buying process and the resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. More and more down payment providers are offering online education options for their home buyer courses. Course material is typically in line with HUD certified home buyer education. Most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online session at the consumer's discretion. This allows buyers to work ahead towards the down payment assistance pre-approval and hit the market as more competitive and informed shoppers. And most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. Well, now we'll take a look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional options typically only available through a state or local housing finance agency. Some of the most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value, or LTVs, as we say as well. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with a higher LTV. And you can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those same housing finance agencies. Now, affordable first mortgages help further reduce the cost of homeownership for new buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them. As we like to say, getting them into a home sooner than they would have otherwise been able to. So now let's look at the third of the most common homebuyer programs, the mortgage credit certificate. The mortgage credit certificate, or MCC, is available from state and local housing finance agencies in some states. It's important to note that not every state offers an MCC. But if there's one in your market, we ask that you take a look. They are a great benefit for home buyers. The MCC offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of your mortgage interest costs, and you still get to deduct the rest of the mortgage interest you paid each year. MCCs help reduce the buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's take a look at an example of how an MCC works. Let's take a $200,000 home. The buyer closes and makes 12 payments in the year. They've paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit. So in this example, $2,000. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. And here we have a recent case study in collaboration with Loan Depot. It details the success originator Mosey Gatling has had engaging partners to explore affordable mortgage solutions for home buyers. The visual is regarding layering two Nevada Rural Housing Authority's programs, in this example, DPA and an MCC, of course, if conditions permit. The example depicts the potential savings when exploring affordable mortgage solutions for your home buyers. So let's wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or even unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement. The assistance amount is increased, and the income limits and sales price limits are often higher. The idea here is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. They are usually bounded by specific cities, zip codes, or census tracts, or sometimes entire counties. There are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. For example, in Georgia, the state funds the Georgia Dream program that offers $10,000 in down payment assistance to eligible buyers. But teachers, police officers, and nurses can get an additional $2,500 for a total of $12,500 in down payment and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but public school system employees at large, such as paraprofessionals, librarians, school nurses, and others as well, or protectors could include police officers, sheriff's deputies, corrections, and probation officers. Another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first time homebuyer requirement for veterans. Some offer higher assistance amounts too. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. And some of these programs offer the same or similar incentives to active military and Guard or Reserves members. And we actually, this week, in honor of Veterans Day, published a blog where we actually highlight the number of these programs, some brief descriptions as well. So if you have an opportunity, if we can link to it, we will. It's on our website, down payment resource, under the education tab, I believe for professionals. It'll be one of the first two blogs there, but a wonderful read, obviously discussing the importance of these programs. Now, we've given you a lot of information today, but we definitely want you to know how to access all of these DPA programs once we leave today's webinar. So I'll show you a number of ways you can access DPA info and perhaps even start to enhance your marketing. Anyone, not just on this call, anyone in general, can go to downpaymentresource.com, do an eligibility search for free anywhere in the country to see what's out there for you or your client. If you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available homebuyer assistance programs. And we provide these matching tools in your MLS agent and client portal listing reports. You also get Down Payment Connect for free through these MLS partners. So check out DPR and let your clients know what type of homebuyer assistance programs are available. Also, talk to your lending partners about which programs they may offer. And of course, please let us know if you have any questions along the way. We are continuing to onboard MLSs, and several more will be launching DPR within the coming weeks. If you're a member of one of the partner MLSs, when you are logged into your MLS, we ask that you look for our down payment resource button as shown on the screen, which will appear on eligible listing. You'll see these down payment buttons on agent reports as well as in your client portals. So click it and we'll tell you or your client which programs are available for properties that they like the most. Now, Down Payment Connect is free for members of our MLS partners. If you're an agent and not a member of one of those MLSs, you too can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. And loan officers, we have a version for you. We have not forgotten about you, which allows you to control which programs consumers see so you are better aligned with the product offerings at your company. Now, you may be asking, what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs within your market. You can use your Down Payment Connect link on your website, in your email marketing, and across all social media platforms. And just to be clear, you are not buying leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to generate your own leads, and nobody else gets your leads, just you. So we encourage you to get creative, reach more buyers, and help educate them on these amazing opportunities. I would also be remiss if I did not mention our growing Facebook group, Down Payment Insiders. There, you can join over 13,000 real estate agents, loan officers, housing counselors, and even DPA providers, as everyone discusses best practices, right? Experiences with DPAs, first-time home buyers, working with lenders, learning from each other, marketing ideas. So you can listen in and learn or participate in the dialogue and engage with those peers. And we've heard It's also a great place to network and connect with loan officers that offer DPAs in your market. This is a very important point because we get this question a lot, right? How do we locate a loan officer that is knowledgeable, not just knowledgeable, but experienced in these down payment assistance programs? This is a wonderful resource, and we suggest you check it out. So I'll leave you with a case study that helps illustrate just how important DPA info is for realtors and home buyers. Amber was a new agent in Florida. No one was helping her peers understand down payment assistance requirements, as many of them began to explore the idea of homeownership. So Amber stepped in, learned all about down payment assistance programs, and decided to build her business serving those same buyers. Like Amber's clients, DPA customers become customers for life. So we ask that you tell their story, help them, and they will refer their family members and their friends. In closing, we ask that you feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. And with that, we will be sticking around to answer a few additional questions, but we are insanely grateful for everyone joining us here today to discuss the basics of down payment assistance programs. With that, I would like to turn over to the A team in the background. Are there any specific things we would like to cover? Any specific questions we would like to answer?
Hi, Will. This is Tracy. Just quickly, a couple of things. First and foremost, as always, we always get questions about whether or not this is being recorded. So I do want to address that really quick for those of you that weren't on here from the beginning when we first mentioned it. But we are recording this, and a copy of the recording will be mailed to you along with the slide deck that you can have. It will take a little while longer for us to get that distributed to you. So it's probably going to come through on like Tuesday. That's when our marketing director will be back in. She has some PTO. So she'll be able to process that and get that out to you likely on Tuesday. So keep an eye on that in your email. And then the other thing that I do want to make sure and point out is we've been getting some questions about what are the best next steps to do once you see that programs are available for a home buyer. And I would like to just address that really quick. So, first and foremost, for those of you who are agents, you don't need to feel like you have to be um, super savvy or completely knowledgeable about down payment assistance programs. The best next step, once they fill out that eligibility search and see those programs, is to either get those results to the loan officer they're currently working with, or if they don't already have a loan officer they're working with, then at that time, you can refer them to somebody that you know as a loan officer that is familiar with down payment assistance programs and used to working with those and recommend them to that person and then send along those results to them so they can see the list of all the options. The email that comes through will have links to each of the down payment assistance programs that are reflected as an option so that that loan officer can dig into it and see a little bit more about it if it's not one that they're familiar with. Um, but from that point, the loan officer will guide them on the next steps for any applications that need to be filled out or anything else along the way that needs to be done with the buyer. So I hope that that helps with that question. And I don't know if the rest of the team has anything else they're wanting to address as well.
Thank you, Tracy. Greatly appreciate that. Looking bottom up, I know there's a question regarding does a lender require to be certified on those DPAs? The providers are very clear as to whether or not anyone really, sometimes realtors, sometimes lenders, have to participate in some form of training before they can participate. That is information that we do provide, so it it really depends on the program provider. Um, The social media page, I've gone ahead and put it up, the URL Down Payment Insiders. It is the one with 13.5. So just in the event there's something else out there, that would be the one that I would click on to join. With respect to using the slides in marketing, I believe there is a possibility we would just have to have our logo and our branding there available. Tracy, any
Yep.
clarification? I don't want to say anything
Yeah,
wrong.
I can pitch in here, Will. So when it comes to sharing those, as long as you are referencing that down payment resource is the source of the data that you are providing, we are absolutely comfortable with that. You can certainly share some of the images. You can even share things that you see on our social media if you want to share posts that we make that are informative or educational. Just make sure that you note that it's down payment resource and information.
Tracy, while I have you here, because I know there are specific questions whether or not they're participating within their MLSs or they're interested in Down Payment Connect, if they want more additional information, what would be the best kind of course to take there to kind of reach out to us for that?
So, as far as MLSs go, if you are a member of an MLS that we partner up with, you will be able to find with it. I've seen a few different questions. So when it's in regards to seeing if that's implemented within the listings, you'll be able to see a logo. Generally, it looks like a little money sign with a check mark or a house logo that's green and blue, like the one on the very bottom of the screen on the left where it says down payment resource, but it's usually green and blue. But it's usually that money sign with a check mark, and it will be on uh, the agent single view line. You might have to scroll over to the right to see it because sometimes there's more columns over to the right. Or also when you have an individual listing opened, there's usually somewhere, all MLSs are different on how they set it up, but somewhere within that listing, you'll see that. And then also, if you're trying to locate your down payment connect, you'll be able to usually find that on the dashboard or wherever your home page is of that under products or external links. And then once you click on that, if you are part of an MLS that is already a customer of ours, then that's already waiting for you. You don't have to do anything to implement that. You literally just click on that down payment resource button and you're going to go to your own customized page where you can find um, your link already waiting for you. So I hope that helps answer those questions. But if there are any other questions about MLS specifically, let me know. I'm trying to read
Thank
through
you.
all of them. Yeah, no
Thank you,
problem.
Tracy.
Oh, while we're on that, I see, do you have a list of providers? I'm assuming, Chris, that you're meaning program providers. And the the list of program providers will be based on the eligibility search. So when you see the search results for an individual person that you're um, using that eligibility search for, you'll see the list of who the program providers are and all the details on those. Let me know if that's something different you were asking, though, Chris.
Thank you, Tracy. There was, and we get this, we field this question, I should say, a lot in our webinars with respect to how to find um, lenders that work with down payment assistance programs. Great question. There's a lot of different ways. I would say, in a general sense, if you're using our search eligibility tool, when you open up the information for a program, if there is, let's say, a required participating lender to use, that is a great resource. That link will be provided there. That information is also available to those of you working within your MLSs or Down Payment Connect. It's some of the requirements, right, that come with the program. Another resource is on the screen, joining the Down Payment Insiders group, networking. I would say even locally, within uh, your own offices there, if they're aware of any something kind of grassroots, right, is maybe going to some specific brokers locally, some banks locally. Sometimes lenders themselves perhaps may not be actively promoting it, but everyone sometimes is just looking for that right conversation. So many different ways to go about finding these lenders that participate in these down payment assistance programs. Great question. Let's see. Need to hear more about how to find MCCs. I would say, again, just starting with our search eligibility tool, seeing one if they're available within the state, as not all states have mortgage credit certificates program. Starting with your own state housing finance agency, their website might have some information, but of course that is also listed within down payment resource. So I would suggest just running a quick search, whether it's a state or a specific county, and it should let you know there if there's any mortgage credit certificate program possibly available. Sure. Tracy, one last kind of follow-up question. I know there are sometimes educational opportunities to learn a little bit more about how to navigate our integration within the MLS. But again, if they have any questions about that, would the email address be the best way to reach out and inquire?
Yes, absolutely. So I am actually dropping in chat. I already did the link to Down Payment Insiders, but I'm doing our info at downpaymentresource.com, which if you have any questions, that comes directly to us. So you're welcome to reach out to us. However, if you are part of an MLS and you're wanting to know specifically more about where it's located within the MLS or see if they have any recordings from previous webinars that we've done and things like that that are specifically for that MLS, you can also reach out to them directly. And I'm sure they can navigate you to where you can find that information internally as well. So I can certainly give you and the rest of our team at that info out, we can give you some more information as well. But if you're looking for some of that information, you can go directly to them. And I know that all of our MLSs, anytime we have training scheduled, they will promote that and they'll put that out in different ways depending on how that MLS promotes and informs the members of that. So you're always welcome to join us for those, and a lot of them will have recordings from previous webinars that we've done for them as well.
Thank you, Tracy. And I can see that our team is still in the background answering a few questions. We know we haven't been able to get to everyone today, but of course we've feel free to reach out with some of these questions. Of course, feel free to touch base with us on our socials as well, on Facebook and on LinkedIn. We're always posting about specific topics, even specific opportunities. So, if you ever run into any of us out there, we'd love to hear a lot more about your stories with home buyer assistance programs or with first-time home buyers, or just in general, the feeling, the sense of where you are and how things are going. So once again, we cannot thank you enough for joining us today to talk about the basics of down payment assistance programs. We thank you all very much, and we look forward to touching base with you again. So I hope you all take care.